It started like any other Tuesday. The city was waking up, the air thick with routine and expectation. No one suspected that, within hours, the world's financial system would be thrown into turmoil. Traders sipped coffee, eyes glued to their screens, scanning for the usual market ripples. The hum of computers and quiet chatter filled the room, a familiar soundtrack to another day of high-stakes trading. The market was calm, until, at 9:47 a.m., a single massive sell order hit. In a flash, $9 billion in U.S. Treasuries vanished from the books, gone in an instant. It was a move so sudden and so large, it sent shockwaves through every trading desk in the city. The hum of Wall Street turned to chaos. Phones rang off the hook, alarms blared, and panic swept the trading floor like wildfire. Traders scrambled to make sense of what was happening, their calm replaced by frantic energy. The Dow plunged, the Nasdaq nosedived. Traders, usually stoic and composed, were shouting across the floor, faces pale with disbelief. The numbers on the screens told a story of freefall, and no one knew where the bottom was. The bedrock of global finance was cracking, and everyone could hear it. The unthinkable was happening. Confidence in the world's safest assets was evaporating before their eyes. Across the Atlantic, the news hit Europe like a bombshell. Central banks in Berlin, Paris, and Amsterdam called emergency meetings, their leaders rushing into conference rooms, faces etched with concern. The topic: gold. Their gold, stored for decades in New York vaults, a symbol of trust in the American system. Now, that trust was being questioned. Suddenly, repatriating that gold wasn't just prudent, it was urgent. The idea of leaving their reserves across the ocean felt reckless, even dangerous. Trust in the U.S. system had evaporated. The era of relying on American promises was over. Analysts, once confident in the stability of U.S. debt, now shook their heads in disbelief, wondering how things had unraveled so quickly. This wasn't a market correction. It was a $9 billion statement, a direct challenge to the heart of the American financial system. The sheer scale of the sell-off was a message no one could ignore. For years, U.S. debt was the world's safest asset. But today, someone torched that security blanket, leaving investors exposed and vulnerable. The sense of security that had underpinned global finance was gone. The shockwave wasn't just about money, it was about trust, the invisible glue holding the global economy together. Relationships built over decades were suddenly in question, as old alliances began to fray, and now, that trust was gone. The silence on the trading floor was deafening, broken only by the sound of shredded agreements and abandoned phones. European leaders looked at their gold IOUs and thought, better to have the real thing at home. Plans were made to bring their reserves back, no longer content to rely on distant promises. The world's faith in America's financial leadership was shaken to its core. Headlines around the globe questioned the future of the dollar and the stability of the system that had ruled for generations. The unspoken agreement that kept the global economy stable had just been shattered. The pieces no longer fit together, and no one knew how to put them back. Nobody knew what would come next. The world was left holding its breath, waiting for the next domino to fall. Why the sudden gold rush? The answer is surprisingly straightforward. Trust has evaporated. In the world of global finance, trust is everything. When it disappears, so does the sense of security that underpins international relationships. For decades, countries like Germany, France, and the Netherlands stored a significant portion of their gold reserves in U.S. vaults. This arrangement wasn't just about convenience, it was a powerful symbol of alliance, stability, and mutual confidence in the post-war order. But in recent years, the world has watched as political turmoil and unpredictable U.S. policies have shaken that foundation. The sense that America is no longer the steady, reliable partner it once was, has grown stronger, leaving European leaders uneasy. European officials began to scrutinize their gold certificates, essentially IOUs from the U.S., and realized that having physical gold at home would offer more security and control in uncertain times. This move isn't just about economics or financial safety, it's a deeply political act. It's a quiet, but unmistakable declaration of independence from American oversight and influence. By physically moving gold back to cities like Frankfurt or Paris, Europe is sending a clear message. We no longer trust the U.S. to be the world's financial guardian. We want to take our fate into our own hands. It's also a strategic hedge against a future where the U.S. dollar may lose its dominance. If the dollar's reign ends, gold will be the ultimate fallback. Having gold at home means having real control. No more relying on distant promises or foreign governments to safeguard national wealth. When your closest allies start pulling their valuables from your house, it's a clear sign they fear the house might be at risk of burning down. This is more than just a financial maneuver. It's a geopolitical earthquake, shaking the very foundations of America's financial power and global influence. The US once enjoyed unparalleled global privilege because of the world's trust. Now, that trust is slipping away, one gold bar at a time, and the consequences could reshape the global order for years to come. When panic hits, investors run for cover, a flight to safety. Risky assets are dumped. The scramble is on for safe havens. Gold is the ultimate refuge. It's tangible, timeless, and immune to government promises. As faith in paper money falters, gold prices soar. But gold isn't alone. The Swiss franc and Japanese yen are also classic safe havens, backed by stable governments and strong economies. Money floods into these assets, and out of US dollars. For decades, the world trusted the dollar. Now it's being treated like a hot potato. The more people sell, the weaker the dollar gets. The weaker it gets, the more people want out. It's a vicious cycle, a stampede for the exits, with the dollar getting trampled. The US dollar isn't just any currency, it's the world's reserve. For decades, it has been the backbone of the global financial system, trusted by nations and investors alike. Global trade, from oil to coffee, is priced in dollars. Every day, trillions of dollars move across borders, powering commerce and connecting economies. Countries hold dollars to stabilize their economies. These reserves act as a financial shield, helping nations weather storms and maintain confidence in their own currencies. This gave the US enormous privilege: print money, pay debts, and the world accepts it. America could borrow cheaply, fund its ambitions, and run deficits with little consequence. But now, that privilege is under threat. Headlines flash, warnings, and uncertainty ripples through markets. The $9 billion Treasury sell-off was a warning shot. Investors are questioning the dollar's safety, and the world is watching closely. As trust fades, investors dump dollars, flooding the market and driving its value down. Panic spreads as the dollar's dominance is challenged. A weaker dollar means imports cost more. Travel, cars, and goods all get pricier, fueling inflation at home. Everyday Americans feel the pinch as their purchasing power shrinks. Think Brexit's pound crash, but on a global scale. The shockwaves would be felt in every corner of the world, not just in the US. A crisis of confidence in the dollar disrupts every supply chain, trade deal, and investment worldwide. No country or business is immune to the fallout. A falling dollar erodes the wealth of every holder. Countries like China see their reserves shrink daily. The impact is immediate and severe, threatening global stability. The more they sell, the worse it gets, a doom loop. Each sale triggers more panic, deepening the crisis and accelerating the dollar's decline. The privilege built over 80 years is unraveling in days. The world is witnessing a turning point as the foundation of global finance is shaken to its core. How did we get here? The seeds were planted years ago. Former President Trump's America First policies shook global trust, treating allies as rivals, tearing up agreements, and starting trade wars. Allies realized relying on the US was risky. They began diversifying reserves and bringing gold home. Trump's use of the dollar as a weapon, through sanctions and tariffs, showed the world how much power America held, and how easily it could be used against them. This scared even close allies, prompting them to seek alternatives. The perception of the US shifted from stable leader to unpredictable partner. The trust underpinning the dollar's dominance was damaged. Today's $9 billion sell-off is the result of years of eroding faith. A bill for disruption finally coming due. In the eye of this financial storm, experts are sounding the alarm. Many predict a sustained period of dollar weakness and a shift to a multi-currency world. The dollar's reign as the sole reserve currency is ending. Gold is set to reclaim its place as a central pillar of global finance. Central banks are expected to boost gold reserves, seeking stability and tangible assets. The best-case scenario? A bumpy, gradual transition to a system where several currencies share reserve status. The worst? Currency wars, protectionism, and a breakdown of global trade. Most expect volatility, instability, and rising geopolitical tensions. As one expert put it, we're flying the plane while redesigning the engines. Buckle up. One massive sell-off, and the world has changed. The trust holding the global financial system together has been exposed as fragile. The era of unquestioned American financial supremacy is over. As the dollar weakens, US power declines, and nations with strong gold reserves, like the EU and China, rise. We may be witnessing the dawn of a new, more fragmented and unstable economic order. This isn't just a problem for bankers, it affects everyone. Higher inflation, slower growth, more crises. The world could fracture into competing blocks with digital iron curtains dividing economies. The $9 billion bombshell was a wake-up call. The tectonic plates of global power are shifting. The future could be a golden dawn, or a global standoff. One thing is certain, the world of tomorrow will not be the world of yesterday, and we're all living through the moment it changed forever. Good luck with that.